Have you ever wondered how your payroll is being computed by your employer? Are you curious to know what are the things considered in it? In this video, we will help you understand the components of payroll and how it is being computed and processed. Right after the discussion, illustrative cases and solutions will be presented to help you further understand payroll. Now let us start. So, what is payroll? There are a lot of different things a payroll can mean, but the common definition of it is that payroll is the amount an employer pays to an employees during each period. It involves taking the gross compensation, which is deducted by mandatory contributions and other deductions to arrive at the net pay. According to Article 103 of the Labor Code of the Philippines, wages shall be paid at least once every 2 weeks or twice a month at intervals not exceeding 16 days. Some employers pay their employees on the 15th and 30th of the month, while others pay their employees on the 10th and 25th of the month. Employers who do not follow the mandated payment scheme may get into trouble legally. What constitutes gross compensation? Revenue Regulation Number 8-2018 defines compensation income as all remuneration for all services performed by an employee under an employer-employee relationship, unless specifically excluded by the code. It constitutes salaries, wages, emoluments and honoraria, allowances, commissions, and other income of similar nature. Gross compensation income includes taxable and non-taxable items. In computing your income tax, we're going to have to remove the non-taxable items, such as de minimis benefits not exceeding its limits, and 13th month pay, and other benefits which should not exceed 90,000 pesos to arrive at the taxable compensation income and apply the allowable deductions such as the mandatory contributions and the like. Mandatory contributions constitutes contribution in 3 social insurances, namely Social Security System, Home Development Mutual Fund, and Philippine Health Insurance Corporation. These are paid by the employer on the employee's behalf and are deducted from the gross compensation. These contributions vary depending on the range of compensation. For SSS, below is the contribution table. If an employee has a monthly income of 15,000, the total contribution will be 1,830 pesos a month. 600 pesos of it will be contributed by an employee, which is deducted from its gross compensation, and the remaining 1,230 pesos will be the employer's share of the contribution, which is not deducted from the employee's gross compensation. Contributions to HMDF or Pag-ibig is set at 200 pesos and is equally shared by both the employer and employee. This means that only 100 pesos is deducted from the gross compensation income of the employee. For PhilHealth, just like SSS, the contribution depends on how much the monthly salary of an employee is. The only difference is that PhilHealth contributions are based on the monthly basic salary. A monthly basic salary of 10,000 will have a PhilHealth contribution of 300 pesos and is shared equally by the employee and employer. Tax withheld is another deduction from the gross compensation income. The amount is based on the taxable income applied with the graduated withholding tax rates. Presented here in the table is the income tax table on an annual basis. This is used in determining the annual income tax due of an employee. As you can see in the revised withholding tax table, computing for taxes may be on a daily basis, weekly basis, semi-monthly basis, or monthly basis. Are you ready to apply all that we have discussed earlier? Let us start with this problem. Joey Company has 2 employees with compensation as follows. Our goal here is to identify the net pay of the employees and how much tax is deducted from their salaries. For employee X, the gross compensation income is $15,000 after adding the monthly basic pay of $10,000 and non-taxable allowances of $5,000. Next is deduct the mandatory contributions. For SSS, based on the table, the contribution to be deducted is 600 pesos only. PhilHealth amounts to 150 pesos, since the monthly basic salary is 10,000. The rate to be used to it is 3%, which will result to a monthly PhilHealth contribution of 300 pesos. This will be shared equally by the employee and employer. Therefore, the amount to be deducted will only be half of it, and that is 150 pesos. Lastly, Pag-ibig contribution is set to 200 pesos a month and will be shared equally by the employee and employer. Only 100 pesos is deducted from the gross compensation. Total mandatory contributions amount to 850 pesos. After applying the deductions, the net income before tax is 14,150 pesos. This time, we will be identifying the tax using the revised withholding tax table and apply the monthly basis. In computing the tax, only the monthly basic pay is considered since the 5,000 peso allowance is non-taxable. The monthly basic pay is then reduced by the mandatory contributions of 850 pesos to arrive at the taxable compensation income of 9,150 pesos. Based on the monthly withholding tax table, the taxable income falls under the range of 20,833 and below. This means that no tax is withheld and deducted from the income of employer X. With this, the net income after tax of employee X is 14,150 pesos. How about employee Y? For employee Y, the gross compensation income is 35,000 after adding the monthly basic pay of 30,000 and non-taxable allowances of 5,000. Next is deduct the mandatory contributions. For SSS, based on the table, the contribution to be deducted is 800 pesos only. PhilHealth amounts to 450 pesos. Since the monthly basic salary is 30,000, the rate to be used to it is 3%, which will result to a monthly PhilHealth contribution of 900 pesos. This will be shared equally by the employee and employer. Therefore, the amount to be deducted will only be half of it, and that is 450 pesos. Just like employee X, Pag-ibig contribution is set to 200 pesos a month and will be shared equally by the employee and employer. Only 100 pesos is deducted from the gross compensation. Total mandatory contributions amount to 1,350 pesos. After applying the deductions, the net income before tax is 33,650 pesos. This time, we will be identifying the tax using the revised withholding tax table and applying the monthly basis. To compute, the monthly basic pay is then reduced by the mandatory contributions of 1,350 pesos to arrive at the taxable compensation income of 28,650 pesos. Based on the monthly withholding tax table, the taxable income falls under the compensation range of 20,833 to 33,332. Unlike employee X, employee Y's taxable income is taxed by 20% in excess of 20,833. Therefore, 28,650 less 20,833 is 7,817. Multiply it by 20% and we get the prescribed withholding tax of 1,563.40. With this, the net income after tax of employee Y is 32,086 pesos and 60 cents. There you have it. That ends our discussion about payroll. I hope you have learned a lot from it. Please do not forget to click the link below and evaluate us. Goodbye.